Assalamualaikum and a very good afternoon. My name is Najwa binti Jai. My metric number is 197229. I will be your first presenter. We're going to discuss about cash case 1 and PP case 2. Our group 9, consists of 3 members, Ong, Vincent, and myself. Let's move on to cash case 1. Question A asks, you suspect that the cashier may have misappropriated some money and are concerned specifically that some of the undeposited receipt of 3,794.41 cents may have been taken. Prepare a schedule showing your estimate of loss. To answer question A, we have prepared a schedule showing estimate of loss. The diagram on your left shows the calculation, and we have concluded the amount of loss is 719.50. Therefore, the minimum amount of loss resulted from the theft is 719.50 if the cash reported as undeposited receipt of 3,794.41 was actually on hand. If the 3,794.41 was not available to deposit or represent the December receipt, the maximum loss could be 4,513.91, the sum of 719.50 plus 3,794.41 for November. Such shortages for November and the attempt to conceal the shortages will alert the auditor to examine the bank reconciliation throughout the year. Now let's move on to question B. How did the cashier attempt to conceal the thief? We have concluded that there are 3 attempts that can happen. Firstly, not listing all outstanding checks. Secondly, miscalculating the outstanding checks shown on the reconciliation. Last but not least, subtracting an item from the bank balances that should be added to the book balances.
Next, I will start with question C. On the basis of this information only, name 2 specific features of internal control that were apparently missing. The first specific features of internal control that were apparently missing is no one other than the cashier is responsible for tracing cash received to the deposit in the bank. The second specific feature is the cashier is also responsible for preparing the bank reconciliation. Next, I will continue with question D. If the cashier's October 31st reconciliation is known to be proper and you start your audit on December 10, what specific procedures could you perform to discover the thief? The following auditing procedure on December 10 would uncover the thief if the October 31st reconciliation is known to be correct. The first one is compare check written since October 31st with check outstanding at that time and with check register for November in order to ascertain outstanding check. The second procedure is to trace cash on hand at October 31st as well as received during November to deposit in banks, ascertaining undeposited cash at November 30. The next procedure is to count the cash on hand on December 5 by adding the deposit and subtracting the receipt since November 30 to develop cash on hand at November 30. Last but not least, compare adjusted cash on hand developed in count of step 3 with undeposited cash ascertained in tracing in step 2. So that's all from me. I will pass to the next presenter.
Next, I will explain the PPA case 2. The question requires to describe the key internal control related to grants property, equipment, and related transactions that Naziman may consider in setting the control risk. The key internal control related to grant property, equipment, and related transactions that Naziman may consider in assessing control risk include the following. Advance approval in accordance with management criteria is required for property and equipment transaction. Approval authority for transaction above an established monetary value is required at a higher level, such as Board of Directors. Property and equipment transactions are adequately documented. There are written policies covering capitalizing expenditure, clarifying leases, and determining estimated useful life, salvage values, and method of depreciation and amortization. There are written policies covering retirement procedure that include serially number retirement work order, stating the reason of retirement and bearing appropriate. There are adequately policy and procedure to determine whether property and equipment are received and property recorded, such as a system that matches purchase order, receiving report, and vendor invoice. There are adequate procedures to determine whether disposition of property and equipment are properly accounted for and proceeds, if any, received in accordance with management authorization. A property and equipment subsidiary ledger is maintained showing additional retirement and depreciation, and the ledger is periodically reconciled. Property and equipment is physically inspected and reconciled at reasonable interval with the independently maintained property and equipment record. An annual budget is prepared and monitored to forecast and control acquisition and retirement of property and equipment. Reporting procedure ensure prompt identification and analysis of variance between authorized expenditure and actual costs. Adequate safeguard protect property and equipment. Property and equipment are insured in accordance with management authorization. Documents evidencing title and property right are periodically compared with the detailed property record. The entity employs internal auditor to test whether the internal controls are operating effectively.